What's up, YouTube? It's Joe Catrapalia sitting on the couch making some money investing in fractional real estate online, as usual. Um, if you've watched my channel before, or maybe you haven't, I mostly talk about investing in fractional real estate from the perspective of I'm somebody who is, bringing capital to the sites and just buying pieces online. But today I want to talk about something a little bit different. If you're an actual real estate investor already, or if you own a home that you live in and you've thought about, tapping your equity to become a real estate investor, um, and you're not really that interested in the fractional side of things, I think there are some ways that you can use some of the fractional real estate investing platforms to your advantage. And maybe you use it as a way to start doing some fractional investing, or maybe you just use it as a way to get some capital to do additional investing in real life, right? In whole properties. And I say in real life, obviously, fractional investing is real life investing. It's just you're not owning that asset outright. You're owning little pieces of it online. And so, a couple of things. So, my goal today isn't going to be to try to convince you to invest in fractional real estate. I think, that's what most of my channel is about, is like why we might want to do that, what's appealing, how we go about, just how I go about investing on some of these different platforms. But I do want to just mention, like, really high level, some of the things. The biggest reason is with the same amount of capital, you can have a much more diverse portfolio. You don't have to sign on any debt, right? Like it is truly just an equity investment. There's no, even if there is leverage involved, you as the owner don't have to sign on the note. Um, it can be extremely passive. It might not be completely passive because you have to make some decisions and be involved with some other owners, but it's definitely couch money, which is what I'm usually going for. I don't have to get off the couch, but I might have to put a little time and effort in. And so, as my day job, I am still working mostly with investors that buy properties in real life here in San Antonio, Texas. If you're buying short-term rentals, long-term rentals, small multifamily land, all that sort of stuff is what I do mostly. And I've just found a lot of my clients um, haven't been as interested in the fractional real estate investing as I am. It's probably good for me because the more clients that move over to that, it does create less transactions for me in whole properties. But I think that doesn't have to be the case, because I think clients could also use some of those platforms to access more money to buy more properties in real life. And so I want to show you a couple of different ways. I none of this is new. If you've watched every single one of my videos, you've probably seen me mention some of these things. Um, but I think there's a couple different things that we can do, right? And the first one is about raising equity. So you might not, Lofty is one of the platforms where people bring investment properties to the platform, primarily investment properties, sell little pieces that are equity. You can buy into it, collect some rent and get some rights in the property as far as when it sells, getting some appreciation, some benefit from the appreciation. Well, on this platform, you can also bring, like, this property is the reason I have it, is this is an owner occupied property. They brought it to the platform. They wanted to access some of their equity. For one reason or another, they didn't have access to debt, or the debt maybe didn't, make as much sense. Like, uh, so if you have a nice low rate on your mortgage, you don't want to do a full refinance just to pull out a little bit of cash. And not everybody easily qualifies for a home equity line of credit, or sometimes they might not want to give you as much as you'd want to have access to. So one of the things you can do is then bring your property onto the platform, sell out a portion of your equity to get that cash. Then you have to pay, the investors who bought that rental yield. But you can do that and have a guaranteed buyback so that you can buy it back at the end. Um, so it looks a lot like debt, but it is not a debt instrument. So it's a way to access your equity. Now you might want to do that if you have if the home you live in has a bunch of equity, you want to pull some out to invest in another property. This would be a great way to do that. Or if you wanted to pull it out, either to buy another property in real life, or to, buy it to invest. If you did get into the fractional real estate investing, you could buy a bunch of pieces of other people's equity. Um, if you were just needed some money to get that home prepared for sale, That's actually the main, the best use case I think for Saul's Lot. This is a much newer platform, but it is basically what they're designed for. You're actually selling a piece of your equity in a forward sale. You end up having to sell it at a slight discount, or sometimes a big discount, but it's a small piece of your equity. And so you can do that so that you can get access to that money, to make repairs to the property or carrying costs as you're waiting to sell it for whatever the purpose is. But it's a way to do that if if you don't have access to debt, or if you don't want, or if the debt that you get is just too expensive. So this works a lot. This would work both for, again, if it's you're an owner occupant, or if you could do it with an investment property as well. Um, Going back to doing this on Lofty, you can do it with, like I said, to access home equity, but you can also do this to access equity in investment properties. And so, you could bring a property that you brought onto here. Hopefully, it's a property you've added some value in, and then you can sell that equity to realize some of that value that you've already added. And then go out and buy another property in the real world. If you saw the interview I did with Earl a couple weeks ago, that's exactly what he's doing. He's amassing a pretty decent sized portfolio for someone, for a young person starting out in the real estate industry. I mean, he's been doing it for a number of years now. I don't want to, minimize his experience, but he's building a portfolio faster than most people are able to, at that point in their career, because he's um, constantly bringing a new, he's brought a property to the platform, took that money, is going and getting the next one ready. And as long as you're adding value when you buy that property in the real world, and you're, so that you're able to sell your equity out, not, at a higher price than what you bought into that property, you're able to make that profit quickly. You could amass a pretty good portfolio. So I think that's an opportunity that more real world investors should be taking advantage of. Um, and I just don't see it, and I think that especially in today's world where it's really hard to refinance, I think both doing it, and I think that that's sort of their main use case, and so people understand that. The home equity piece, I think, where it's one that you actually live in, I think that's probably news to some of you. But that's really all that I wanted to say about that piece. The other thing is, I think that I would really look at some of these platforms as a source of deals if I lived in any of the markets where these operated. So, for example, if I were in Chicago or St. Louis, or where else? Oh, what are we doing here? Accidentally opening a property. Cleveland, Ohio, any of the markets that Lofty has a lot of these really discounted properties in, I would be out there making unsolicited offers to Lofty to buy some of these, because I own a lot of these discounted ones, and we my hope is to eventually sell them in the real world. uh Not, I don't think the token prices are ever going to come back to what they were when they were brought to the platform. I think a lot of these properties were just not really the right properties to be cash flowing investments. Excuse me, not at the price that someone would pay for them. And so I think there's a lot of opportunity to come in, make it so, like, for example, one of these properties, if it's currently listed at $20 per token, this was originally brought on the platform at $50. And so that's a 60% discount from their original purchase price on this. Some of them it's because those purchase prices were so high or too high, but a lot of them it's just because of the way the property's operating. And so there's opportunities, some of these, and that's what I'm doing when I'm buying into these, is I'm pushing us to sell them in the real world. And then, sometimes that means we have to put some more money into them, get them fixed up, get them ready to sell. And then there's transaction costs, but there's the reason that I'm doing this a lot is because I think there's the ability to make really large returns buying into these cheaply. But I think if I were somebody who just wanted to buy whole properties, I could be making offers on these at a price that is a premium to the current token price, but still a pretty big discount from what that property should sell for in real life. And if you're willing to just go ahead and buy it as is, you're helping the owners of these avoid some transaction costs. For example, they're not having to, use a listing agent or whatnot, or they're not having to spend the money to get to get it just looking just right. Because some of these get stuck because people bought the current investors in those don't have enough cash in the entity to make it ready for the next tenant, and that's sort of the worst case scenario for some of these because as investors I buy into some of these and then I propose, okay, we'll do a capital call, and if the other investors don't want to put the money in, I will lend the money to the entity. But I can only do that on so many of these, and so a lot of these, there's not anybody really pushing that or driving the bus, and so if I were in one of these markets, I'd take a hard look at everything that they own there and actually dig into, you can see what they're leased for, you can see the history, you can see the repairs and whatnot. And I'm sure that, this would be a lot easier than than the driving for dollars or cold calling. These are deals that I think are real deals that have, if you send in an offer, they're going to just put it out to vote for all the owners of tokens. And I'll tell you, so most of the ones, if I've bought tokens at 15 or $20, and we get an offer where it's going to net us 25 or 30, I'm probably voting to do that, right? And so I think that there's opportunities to actually make deals with the platforms if you're buying in real life. This was just one that I think is a good example of, it is just super cheap. But when you look at this asset in the real world, it seems like it should be able to sell for quite a bit more, but they have a big negative they basically have generated some debt to get the property ready. And um, I don't know, maybe this isn't the best one because I think they actually did get a loan to fix it up. But some of them, they're stuck in a spot where they really need a loan, but they can't get one at the moment. And so I think this is a platform where you could make offers. Another one is Landa. Um, this is, if you've watched my videos on this, it really seems like, at least from the outside looking in, that this platform is struggling terribly. Um, they've got some bad press. They've got a lot of people complaining online. And then if you just look and dig into the individual properties, a lot of them, well, I don't know if this is, yeah, a lot of them are just not paying out any dividend whatsoever. And so, and I don't know, maybe a month or so ago, they added this "I want to buy the entire property" button, which just, prompts you to send them an email basically. If I were in any of their markets, I would 100% be contacting them about their property. See, okay, are they interested in selling as a package deal? Would they sell with any sort of financing? Could a lot of these are have a tenant in place and they're just not being operated properly. And can I just buy it outright and get a discount, right? I mean, so I think there's a lot of ways that you might be able to find value interacting with them. Um, I don't know. This is a lot of just different thoughts, but I think if you aren't aware of these companies being out there and what they're doing, you wouldn't even think to be able to buy into some of these. And then the other thing is if you have properties if you're someone, so for example, you buy properties, you fix them up, you run them as a short-term rental, and you're good at doing that. Um, Mogul might be a good exit strategy for you, right? This platform has been one that I've really enjoyed buying properties on. Um, but they've been selling out quickly, and they hardly ever, right now they only have two properties I can invest in. They are paying, they're not getting amazing discounts. Some of the deals they get pretty good discounts, but if the cash flow is there, they're paying, like this one, they're paying pretty much a market rate for that property, but it's because it's one that they really like the 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 way the numbers look, right? And so if you're someone who's good at if you're in one of the markets that they're looking at and you're good at buying a property, getting it fixed up, putting it on Airbnb, but you don't want to just have a big short-term rental portfolio, but you can get it all set up, running well. I think this is a platform that you could potentially approach and sell, and not, in a way that you're saving some transaction costs. And um, I don't know. It just seems like there's some potential there. And then the same thing with Collab, where they have student housing, where they have a real niche. If you have a property that is in one of the markets that they've targeted, they'd be my first call because especially them, they seem to be um, they're bringing properties onto that platform at what appears to me to be a pretty significant premium. Again, as long as the numbers make it so that they can provide the sort of profit that they want to per share. And so I just think that it's an opportunity to do that maybe people aren't really thinking about. Let me just make sure. I think that's all the things that I wanted to mention. Taking out your home equity, swapping out equity from investment properties into more properties, using that to kind of snowball, uh, buying properties from the platforms, where I really do think that there's some opportunity there. And then, using them as an exit strategy to sell onto, whether it's, on Lofty where you're just selling your equity and keeping, that 10% at the end, or whether you're trying to sell your whole properties to some of these companies. Now, I think, like, for example, I'm investing on Mogul because I think they're very picky, right? I mean, I think you'd have to have the right property, but I'm sure at least one of the properties I sold last year for a client that was a short-term rental, I'm sure they would have snapped it right up. And, and I think if as a seller you had gone to them directly, you might have been able to save some money on the costs of that, right? I think that's one of the problems, one of the reasons that the real estate, agent business doesn't go away is, as an owner of properties, it's not always easy to identify who's the right buyer for you. But if now we see these platforms where you have a whole bunch of, where they're basically, you can see exactly what they're buying, right? And you can see what those numbers have to look like. And so uh, I think there's probably a business. So Mogul seems to really be focusing on properties that are already operating, right? The Axelrod was already operating, the Rhodes was, I think the Krakow was too. Definitely the Wags is. I don't know. I didn't look at this one because it was already sold out. This was just a weird deal to me, so I didn't share my thoughts on it because I don't know that if I'm just not understanding what they're doing or what, but it looked too much like financial engineering. But anyway, they have you can look at their deals and really understand they're trying to mitigate risk by buying stuff that they just know is going to do well. And so if I were in a market that I knew they wanted to buy in, um, I could imagine being an entrepreneurial person who doesn't mind getting off the couch a lot more than I do, going out, buying properties, setting them up, running them as short-term rentals, getting 6 months to a year of good numbers, and then having them be like a good exit strategy as far as somebody who's buying those properties, and really paying for the business, right? Like, one of the problems, we sell a lot of short-term rentals for our clients, and if they've run them for a while and then they turn around to go and sell them, a lot of the buyers out there, if you just go to a regular real estate agent and put it, listed online, a lot of times you're not really getting the full value of that operating business. Now, in some markets, you're not going to be able to, but more and more, it's something that that you're able to get a little bit more of. But having, the more that you can find buyers like this, that, their business model depends on them continuing finding properties that, and I think that, they're trying to take that risk out for their investors, having buying ones that are already operating versus them setting it up themselves. And so I think that there's some opportunity to do that potentially, on a programmatic basis, maybe, right? Like, that's something that I would be thinking about, if I were still in a much more entrepreneurial mindset than I'm in now. I'm sort of, uh, over the last several years, have made my portfolio more and more passive, where I'm doing, uh, you know, a lot less, visiting properties, doing things, like actually anything in the real world. But if I were really starting out or really trying to accumulate wealth right now, in a very serious way, I think that that would be one of the things that I'd be very seriously thinking about, right? Is could I, build this sort of almost like a flipping business, but it's I'm doing it in a way that my end sale is not a not a person, not just flipping homes, but actually building these short-term rental businesses, and it would allow you, I think, to buy properties um, that are quite a bit different than what like a typical flipper's doing in a certain market. And again, especially like for the ones for, they're also buying like the pad split model ones. And I think if you had ones, that's what the Rhodes was. And I think if you bought homes and you specifically set them up for those and operated that, I mean, that would be, they'd be definitely somebody I'd approach. And then the same thing about collab. If I had ones that I really, I set up as a well operating student housing, all of these I think are, um, you can find out a lot more about them than you can find out about our typical buyer. And so that's really all I wanted to mention, right? I mean, I think that it's just a few different tools, right, that you can use if you are just a real world investor and you're not that excited about getting the diversification and buying little pieces of a whole bunch of different deals. I don't know. For me, that risk adjusted return of being able to do that has just become very attractive. But if that's not you, there are other ways to take advantage of the fact that these platforms exist out there in the world. And then, one more that I didn't even have on my list, but that I see people doing is a lot of these sites, the investors on there get together on the discords and they talk to each other. And so some of the people are really just using this as a networking platform to to meet some other investors. Maybe they bring one property to the platform, they get a bunch of people that like them, that like the way they operated that property. They take some of those investors off of the, they meet them in real life, and then they get them to invest in their deals in real life. um, that's definitely happening on Lofty. But I think any of the platforms where there are, where they have a significant, have a way set up to talk to the other owners, that's available. That reminds me, I have links in the description below to all the platforms that I mentioned. That if I've invested in them, I have a link on there. I also have a link to a Discord that I've set up that's just to talk about fractional real estate investing in general. And then I always forget to ask until the end, but please like and subscribe if you haven't already. And if you have topics that I haven't covered on here about fractional real estate investing, I know I haven't, this is the first time I've really thought a lot about the other side of it, other than when I did the interview with Earl, who I think, if you're someone who owns properties in real life and thinking about bringing some of those onto these platforms, you should definitely check that out. Um, but I think that there's probably a lot of little things that we could do to use these to really, uh, take advantage of them as an equity raising platform for our real estate businesses in ways that I'm just not, that I haven't been talking a lot about. But I think it's the other side of this. It's not, my primary interest in this. I think, what is really exciting for me is that a lot of people who couldn't buy properties in real life can buy little pieces of properties on here, and then over time amass a pretty decent portfolio. Anyway, that is all the rambling I'm going to do today, at least on video. Until next time, I will keep making mistakes so that you don't have to.